You're taking a look at a live shot of the opening bells on Wall Street on this holiday shortened trading session. I'm Yahoo Finance executive editor Brian Sozzi, and this is Opening Bid. Here on Opening Bid, we bring you the investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money you have. The closely watched employment report for June showed 147,000 jobs were created in the month, ahead of most consensus forecasts. Let's send it down to Yahoo Finance senior reporter Brooke DiPalma live for the NASDAQ in Times Square to see how the markets are reacting. Brooke.
Good morning, Brian. The excitement is still alive and well here at the NASDAQ after that index hit a record high on just this week. If you take a look at all three major indices here, we're seeing all of them in the green across the board. The Dow Jones Industrial moving higher at the open, the NASDAQ and S&P 500. And if you take a closer look at the NASDAQ over the past 5 days, what we've really seen here is once again hitting record highs on that Thursday, and now those record highs extending into the shortened trading day. That's, all markets are set to close here in the U.S. at 1 p.m. Eastern because of that July 4th holiday. So record highs extending this morning, certainly as investors digest three big headlines. That better than expected jobs report from the Bureau of Labor Statistics with 147,000 jobs added. Investors also trying to digest, and you could see that uptick as of yesterday after Trump announced that trade deal with Vietnam. That's getting baked in as well. And of course, the big, beautiful tax bill now in the House's hands, set to go to President Trump. And if you take a closer look at the NASDAQ and the MAG 7 here, over the past 5 days, what we've seen is these stocks rally. Nvidia up 2% over the past 5 days. Apple also getting a bit of a bump here, especially after there's been optimism on the street about what exactly the release of the iPhone 17 can mean in the second half of the year. Another analyst yesterday also boosting his outlook, saying that he sees Apple's ability to defend market share in China. We're also seeing Google, Amazon move higher as well. Tesla has been on a bit of a bumpy ride this week, but certainly Nvidia, keep a closer look at that. And we make way into this morning up about 1%. This morning, Mizzou raised its price target to $185. That's up from $170. Now, something else I want to keep a lookout here is that VIX. This is often considered a fear gauge for investors. Right now, we're seeing it move slightly lower in early trading. And what we really are seeing here is investors are remaining almost calm in this environment where we've had so much uncertainty, so much news about this tariff. And what they really are seeing here is UBS in a note this morning saying is that this market impact should moderate as President Trump's negotiating tactics become increasingly familiar. And that's what we saw yesterday. We saw in Vietnam, they announced a 20% tariff on all imports to the U.S. Now, that was roughly half of that reciprocal tariff announced back in April. And so this is sort of becoming more status quo. Investors are sort of getting used to what we're hearing, and we're not seeing those major swings that we saw at those April lows. Back to you, Sozzi.
That benign VIX index. Like that call out. Thanks so much, Brooke. All right, this holiday shortened trading session won't be without a few, fireworks. So let's fire up your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, I'm hunting for big calls on the markets after today's better than expected June jobs report. Will the tech trade stay on autopilot, or will stock pickers take over and go on the prowl for value? Our pros will weigh in. Number two, dissecting President Trump's signature tax cut and spending bill. With the bill, big beautiful bill, all but on Trump's desk, it could have major ramifications for your portfolio. That is especially if you are a long-term investor. Number three, Trump has a trade deal to celebrate this July 4th weekend. The U.S. said it will apply a 20% tariff on Vietnamese imports, down sharply from the 46% rate unveiled on Liberation Day. U.S. imports to Vietnam will not be subject to tariffs. Markets will now cast their gaze on if a deal can get done with much larger trading partner, China. Here, dish out the analysis. MUFG's head of macro strategy, George Goncalves, Infrastructure Capital Advisors CEO and CIO Jay Hatfield, and Brooke DiPalma is indeed back. George, I want to start with you here. The Trump administration, his supporters often say Trump was right about everything. But what he may be wrong about this morning is the need to cut interest rates. What say you?
No, I think he's right about the fact that we have to lower rates. I mean, I think the government's biggest rising line item on their budget is the interest expense. So I think there is validity in cutting rates, and rates are still a little bit too high. I mean, after a decent jobs number, we can debate the internals of the report. Better than expected, and it does kind of push back the Fed. It keeps them in the wait and see mode. But nonetheless, rates in our view is still about 100 bips too high.
Why are they too high?
Oh, a number of things. I mean, well, one, inflation is proving not to be kind of reaccelerating. The tariffs was the big kind of impediment or the fear that it's been holding back the Fed. But in fact, we're seeing either substitution effects or the actual exporters themselves absorbing some of these costs. I do think that inflation is really, not that main issue. It's more about the jobs market. Because, again, this was a good headline number, but a lot of it was not private sector job growth, and there's been cracks in the jobs market. So we don't want to overread this number. We'll take it as a good number for today ahead of the holiday. But I do think that it's not as good.
Jay, do you agree with George that we still might get these rate cuts?
Absolutely. So it's really important to focus, as George was already discussing. There's only 74,000 private jobs created versus expectation of 100. And there were 73,000 state and local jobs, which is probably just bad seasonal adjustment for the normal reduction from teachers being laid off. So it's really quite a weak report. And that's validated by the fact that reaction in the bond market's pretty muted. I think the big rally or not that big, but somewhat big rally in stocks is just a relief that it wasn't horrible, like wasn't negative, some terrible number.
George, let me get back to you because at the end of the day, we're still seeing a slowing job market compared to last year and even relative to the start of the year. In your view, is the economy near a breaking point?
No, look, I'm not sure if we're at a breaking point. I think the fear post-Liberation Day, some of those have definitely acquiesced, and we're getting used to we're digesting the styles and techniques of the administration, and they have a number of wins now under their belt. I mean, the trade deals are coming through. Like it or not, they're happening. And the big beautiful bill most likely is going to get passed at some point soon. And so these are all great wins. The concern I have is that it's not necessarily going to add to growth in the short run. You might have some gap in terms of retooling the economy more towards the private sector. And that sort of gap is why the government financing is so important, because the government's been a big driver of growth for a long time. So it's kind of like this kind of handoff that's happening, which you can still have like a period of just weaker growth over the course of the summer, and the job layoffs will still continue. So that's why I think you can't overread this.
Jay, earlier in the show, we had another guest talk about the potential for a supersized rate cut in September. I haven't heard that term before, but supersized rate cut, I would imagine, is a 50 basis point rate cut in September. Is that at all in your playbook?
No, it's not really. That would be great if they would do that. But this Fed has no ability to forecast inflation. Inflation's actually already at their target if you mark to market the shelter component. So they're going to be conservative. Powell doesn't want to be known as the modern Arthur Burns of being too loose on inflation. So it's not likely to occur. We do think you'll have a dovish pause in July and then a cut, really driven by the fact that two of the permanent board members, which is really critical, are doves. And so Powell's going to need to placate them.
Jay, I want to get onto President Trump's tax and spending plan. I had a good conversation with the head of the world's largest sovereign wealth fund, Nikolai Tangent, over at Norges Investment Bank. And he reminded me of a good point that from the international community's perspective, this plan could only increase our deficits and debt in this country and might lead to higher long-term interest rates. As a longer-term investor with money in this market, what does this plan mean to you? And does it concern you that we're going to be adding to our deficit?
Well, it's critical to distinguish between the economic reality and the political talking points. So the way that normal investors should analyze the bill is relative to current law. So relative to current law, it actually makes a minor cut in a deficit of about $150 billion a year. That's the way to look at it. The political talking point is you use the CPO numbers, which assumes that all the tax cuts expired, which never was going to happen. So it's not really very fiscally responsible, but we're actually forecasting that the deficit drops next year not really because of that small cut, but because of tariffs. This bill, all those estimates have no tariffs in them. So we're optimistic on the deficit, optimistic on rates, and have a 375 target on the 10-year at year end.
Brooke, let me get over to you, because one part of the economy that might be left holding the bag from this bill, it's the low-income consumer. They may not benefit from these tax cuts. That could put a lot of pressure on a lot of the companies that you cover, Walmart or Target, and even more pressure on the consumer. I think about what we've been hearing from the dollar stores, for example, the past 3 months. This consumer is already pressured, and now we get this bill, and they might see more pressure.
Sozzi, that's exactly the story that we're hearing from examples, Dollar Tree, Dollar General, is this pressure on the low-income consumer, and giving a hint to our viewers later on in the show, but also something that key fast food players like McDonald's are also really worried about. But it's really this idea that these low-income consumers, they may not even necessarily not have the money right now, but it's this cautiousness that they're reacting with to all these major headlines that they're seeing, this nervousness to go out and spend. And that's certainly seeing an impact on fast food companies like McDonald's. But in the flip side, Dollar Tree and Dollar General are doing well in this environment, not only from low-income consumers, but across the board, because everyone's being a bit more pinched, a bit more cautious, and a bit more conscientious about where exactly they're spending their dollars right now. All
right, hang with me, guys. I'm going to send it over to Yahoo Finance Fed correspondent Jennifer Schonberger, live from Washington, D.C., with U.S. Labor Secretary Lori Chavez-DeRemer.
Thanks so much, Brian. Madam Secretary, thank you so much for joining me. It's great to see you.
I'm so glad to be here.
Stronger than expected jobs report again.
4 months in a row.
4 months in a row. The charge this time being led by state and local governments. Your reaction?
Well, my reaction is, as a former mayor, the closest to the people, if we're talking about any government jobs, I think is okay. But what we're seeing is the private sector jobs. We're going to see that uptick too. We've seen it in the past few months. We're going to see it again. This is an exciting time to cut these federal public jobs. So if we're going to have the local and state jobs tick up a little bit closest to people, I think that's okay too.
To your point, we saw the state and local government jobs increase, federal jobs coming down. Private sector jobs, though, kind of holding in place. And we've been hearing from employers who are sort of holding their hiring plans in place because there's uncertainty over what effective tariff rates may be, immigration. Could we see stronger job growth if we saw some of that uncertainty lift?
Well, always uncertainty causes a pause. But the president has done a wonderful job in these tariff talks, in this time of growing the America's economy. It's going to take some time, but he has leaned in on his executive orders. I mean, one of the directions by all of the agencies is to lean in on the workforce. So the Department of Labor, I get to do that. 1 million active apprentices, that's going to solve the growth in that manufacturing sector. But we saw construction tick up. We saw healthcare tick up. We've seen many of the jobs. I mean, I still think plus 70,000 in private sector. That's going to continue to grow as well.
Have you been hearing these concerns in your travels across the country from employers about uncertainty around tariffs at all?
Actually, it's the excitement that I've been hearing. I have been on the ground for the last 2 weeks. I was just in Indiana. I was just in Michigan. I've been to Montana. These are exciting times for business owners. Certainly, again, as I said, it's going to take some time, but they see the power of this president leading the way. They see that we're deployed on the ground to assist them. If I can do any sort of investment or innovation in workforce development, that's what they're wanting to see, that we are all leaning in. And so I'm talking about the apprenticeship program. I want those workers skilled and upskilled. I'm working with our community colleges, our career and technical education schools, centers of excellence. Businesses are investing in that as well. So they're seeing that workforce come online. We're going to see that change in the next several months. I would imagine you're going to start to see, if things loosen up for these businesses, you're going to see those investments right on the ground. And with this bill that's on the Hill that we are waiting to see passed, I couldn't tell you, my former colleagues, I'm leaning into them to say, this is doubling down. This is enlisting them to do their job and assist the president so that these businesses have that certainty to invest.
We are closely watching the House floor here, expecting a final vote for final passage on that big, beautiful tax bill. And like you said, you've been out talking to employers across the country over the past week. What have you been hearing from them specifically on the tax bill and how it could impact their hiring plans?
Well, one of the things that we've talked to, just think about the no tax on overtime. There are so many American workers who want to have the opportunity to keep more of their hard-earned dollars. So no tax on overtime, no tax on tips, no tax on Social Security, making sure that we can give them the suite of benefits that they want to offer to their employees. That's what we're going to see. Think about, we cannot afford a tax hike. If they don't pass this bill, that's exactly what the Democrats are going to deliver to the American people, is a tax hike. And so Republicans can get this bill done. This is what the president has asked us to do. We've leaned in. We're ready to go to get those workers skilled and on the line in order to grow the American economy.
And how quickly, assuming this tax bill does pass and the president signs it into law
As soon as the minority leader gets off of his soapbox, they can get it passed. That's what we're wanting to do. They have been on the floor all night. They've been on the floor this morning. They're ready to pass this bill. Let's get it done.
How many jobs could we see created as a result of this tax bill, and how quickly could we see businesses pivot?
Well, I think it's alleviating that uncertainty so that they can invest. I mean, we're hearing one of the things that people are missing is that skilled workforce. And so it's the training, the upskilling, getting the dollars, make America skilled again. Can you imagine if this bill passes and I can deliver block grants to these states so they can invest in their workforce? Those jobs numbers will tick up and they'll have that workforce ready to go. That's what they're asking for. Market demands to be delivered through this workforce. That's what's going to need this bill to get done.
Switching gears a little bit, I understand you're trying to make it easier for employers to hire temporary migrant workers for sectors like agriculture, farming, hospitality, amidst deportations from the administration and some concerns on parts of businesses that operate in this sector that they could see a shortage of labor supply. Can you tell us about those efforts? Also hearing there may be the establishment of an emergency agency within the Labor Department that could issue temporary work permits. How would that work?
Well, I think there's a couple of things that you touched on. First of all, what we're seeing in these numbers is American-born, or what is the job numbers that are being created. So the president secured the border. We're seeing American-born take on these jobs, but there are still some jobs that our workforce is still in need of, and that is pertaining to agriculture, our H-2A and H-2B visas. That comes through the Department of Labor. So what I have created and asked for is the Office of Immigration Policy, really a sub-agency within the Secretary's office to deliver more of a concierge-style approach so they can get those on-demand workers when they need it in their respective seasons. And we're seeing seasons, they're different in every state. The one-size-fits-all doesn't always work. They needed that assistance so we can make sure we can get them the workers that they need to, deliver the products that are needed. And a lot of times that's, food security is national security. You hear the president talk about that. So we want to assist them in doing so. And that's going to come right through the Department of Labor.
And just to clarify, businesses are concerned, will they be penalized at all for hiring undocumented migrants at some point eventually or not?
Well, legal immigration is what is important here, but we need the workforce. We already have this program in place. This isn't anything new. We just want it more modernized, more efficient, more affordable. That's what the American business owner is asking us to do, and that's going to be delivered through this Office of Immigration Policy right here in the Department of Labor.
Madam Secretary, we'll have to leave the conversation there, but thank you so much, as always, for your insight, and a very happy 4th of July to you and your family.
Great. Well, I'm excited. I'm going to be spending it right here in the nation's capital and celebrate this 4th of July. It's going to be a great year for the American people.
All right, America. Brian Sozzi, send it back to you in New York.
All right, big thank you to Jen Schonberger for that interview with the U.S. Labor Secretary. Straight ahead, we'll have our stock of the day. Your clue for this one, their food isn't as healthy as vegetables. Welcome back to Opening Bid on Yahoo Finance. Checking in on the markets on this jobs report, I should say Thursday, where the economy showed it created a better than expected 147,000 jobs. Seeing green across the screen as the early vibe off of this jobs report is that it's not too bad, not too good, and does not completely remove a rate cut from the Fed, probably at the September meeting. All right, let's fire up our stock of the day. McDonald's shares caught my attention as they have been an unsavory performer of late in the face of a rip-roaring stock market. Stock is down nearly 6% in the past month, underperforming the S&P 500's 5% gain. A new note from Guggenheim says the underperformance reflects two factors. One, investors aren't McLovin defensive stocks at the moment. And two, the low-income consumer remains under financial pressure. Jumping into the Yahoo Finance platform, I find it very interesting that the street remains largely upbeat on Mickey D's when looking at their analyst ratings. This could be the recipe for a negative surprise when McDonald's reports earnings in just a few weeks. Still with me is my roundtable, Brooke DiPalma, Jay Hatfield, and George Goncalves. Brooke, let me start with you because you cover restaurants here for us. You know, earlier in the week, you and I were talking about the move higher in Cava. A lot of optimism or some renewed optimism in that stock. McDonald's not the case, underperforming the S&P 500. And you know, not only is the consumer under pressure, but McDonald's has hiked prices really across the board.
Yeah, Brian, what we're really seeing here is this struggle for McDonald's, both internally as they look to overcome that E. coli outbreak that hit the company last fall. Also, they're struggling to maintain their value leadership, and they have this broad marketing calendar that they're really trying to ramp up heading into the summer with that reintroduction of Snap Grab as they look to regain that leadership. Now, big picture here, though, when you think about that big, beautiful tax bill that's currently in the House, that also could have implications for the low-income consumer, which is primarily McDonald's audience here. Think about the Medicaid and SNAP cuts that will likely come as an impact of that big, beautiful tax bill. And that can have an impact on just how much low-income consumers have to shop. And when you think about McDonald's, and like you said, compare it to something like Cava, which has more of a broad, wide-ranging key audience where consumers are really looking for value here, we've seen their foot traffic tick up in recent weeks, and McDonald's really stay flat here because bottom line here is consumers really want the best bang for their buck. And right now with McDonald's, maybe they're just not seeing it in this environment.
George, let me get over to you. How challenged, from your vantage point, is the low-income consumer here in the United States?
Look, I would argue the low-income consumers probably been in some version of their own recession for the last 18 months, in and out, and they really have not benefited from kind of the broader kind of equity market moves and just the economy doing relatively well. It hasn't really trickled down, and so I do think that the low-end consumer has been really left behind. I mean, they have really high debt loads. Interest rates matter to them actually even more so, and so that's another reason why to cut. So I do think that that's holding back the consumer overall.
Jay, is it hard to bet on stocks that have any exposure to the low-income shopper here?
Well, we do think that part of the story is priced in, but the key element to focus on with McDonald's, and we do own it in our large cap dividend fund, ICAP, but we're underweighted, is that its beta or its sensitivity to the market is only 0.35, which is one of the lowest. That's below utilities. So it gets used by institutional investors, mutual funds, as a defensive play. And we're quite optimistic about the market. We have a 6,600 target, and we do think we're going to have a strong July rally like we normally do. So in that market, as you're seeing today, when the stock market's super strong, the high beta stocks are outperforming their beta, and the low beta stocks are underperforming their beta. So we would be neutral to negative on McDonald's until we get into the normal August, September swoon. Mm-hmm. And that's when that stock might start working.
Jay, let me stay on you. Then what are you bullish on?
We are bullish on really high beta stocks. So we like Broadcom, and all these stocks have betas close to 2, so they're twice as risky as the market. So we like Amazon and Broadcom on the tech side. On the financial side, we really love Goldman Sachs and KKR. KKR sold off during the tariff tantrum. Goldman is benefiting from AI, IPOs, and a slowly growing M&A market. So we're bullish, and both of those stocks, like I said, are quite high risk. So they're not going to work if we're wrong about the market. So, it should do well in July.
Yeah, Brooke, I guess final word is that millennials are supporting the likes of Cava, and it's still tough out there for low-income consumers. All right, we're going to leave it there. A big thank you to my contributors today, Brooke DiPalma, Jay Hatfield, and George Goncalves. Good to see you guys, and happy July 4th. All right, coming up, Yahoo Finance Market Catalyst. We bring you the news behind the market moves for the trading day on this jobs report Thursday. You won't want to miss it.